We're really living in a world where people spend more than half of their waking hours in a digital space. But the way that we still value things is still through the physical world. Like we value gold as an example, which I think in a while it will not make sense anymore.
That was Maria Shen. Maria is a partner at Electric Capital, an early-stage venture firm focused on cryptocurrencies, blockchain, and the Web3 ecosystem. In this episode, Maria shares her insights on why remittance, which was initially touted as a hero use case of the blockchain, hasn't been fully realized, how VCs add value to the Web3 ecosystem, even though some may see their participation as antithetical to the ethos of Web3. Maria also discusses which blockchain applications and opportunities she's most excited about. She also provides more information about Electric Capital, what's next for them, typical check sizes, and their current hiring needs. Maria is deeply knowledgeable in this space. I found this entire conversation quite insightful, and I'm sure you will too. Without further ado, here's Maria. Hi, Maria. Thank you for joining the Onchain Medley podcast today. How are you doing?
I'm doing great. Thank you so much for having me.
Of course. Excited to talk to you. Let's just get started. I'd love to learn more about your background and what sparked your interest in blockchain, Web3. I kind of use those interchangeably, but you might beg to differ. So feel free to also shed a light on that as well. But I'd love to start with your background first.
Yeah, sure. I'll just, go chronologically. I was born in China, grew up mostly in the United States, studied computer science and government at Harvard, and then afterwards went to Microsoft and worked on search tech there as a PM. Wanted to start my own company, didn't know what I wanted to do. So I went to get my master's in computer science to kind of stall for time. And while I was doing that, did end up starting my own company in the supply chain space, which is how I ended up getting into crypto. So, a lot of my customers had to deal with cross-border payments. And cross-border business payments specifically were especially painful and not well supported. And so this was, in 2016, I started looking at crypto as a solution for cross-border business payments and smart contracts, specifically as a way to perhaps do escrow or do rules on top of those transactions. Didn't take me very long to figure out that this was not ready for mainstream adoption. But, it's just like, I'm sure, as you know, like fiat on-ramps and off-ramps, especially in 2016, very, very unsophisticated, very difficult to use. Crypto custody is very difficult for people. KYC and AML to even start using these exchanges, even if you wanted to, was very difficult, and with kind of zero regulatory guidance as well. And so all of that meant that this kind of dream of using crypto for lightweight escrow, for business logic on top of cross-border payments, just was obviously not going to happen. But I think the core idea that you can write rules on top of money is really powerful. Like once you get over the hump that Bitcoin and Ethereum and some of these cryptocurrencies can be considered money, of course, and you get over that hump, and then you believe that, because all of this is programmable, that you can write rules on top of it, that seems very, very useful to me. And so in 2018, decided to get into crypto full-time.
Gotcha. Thank you for sharing. So going back to your background about working in supply chain and wanting to use it for cross-border transactions, and it hasn't taken shape yet, do you just have any insights into why that is? Because that's why I got excited about it, but I'm just wondering if we'll ever get to that sort of reality. What do you think about that?
Yeah, I mean, I think it is happening, but at a very small scale. I think most of it is happening at an individual scale. So, for example, someone trying to get money to friends and family outside of the country could use Bitcoin and Ethereum, especially Bitcoin, I think is used a lot for this because Bitcoin at this point is available in almost every single country. So it is widely usable and widely accepted. There's still difficulties, but at least, in most countries, you can, if you have Bitcoin, you can find a counterparty to change that into local fiat. And so that's been very useful on an individual scale for getting money out and getting money in. But, on a business scale, that has been happening a little bit. Some of the teams that I talk to who are working on remittances, crypto rails for remittances, have talked about how businesses in Nigeria, for example, a lot of them do business with manufacturers in Asia or suppliers in Asia. And a lot of these suppliers will take Bitcoin. And so that does happen for the business case. But, I think that the difficulty is that it takes a lot of sophistication for people to be able to custody and handle Bitcoin. Custody is still really hard. Like, it's for small numbers, it's fine. But if you're handling like most of your company funds in crypto, then, are you going to keep it on a USB stick? Like, how do you keep it safe? How do you get multiple signers on it? At least in the United States now, there are these third-party providers for custody now, like Anchorage, like Coinbase, that helps with a lot of that, but that's not widely available. And so it makes that very difficult, I think, for people to use today.
So now you're a partner at Electric Capital. Can you just say more about what Electric Capital is, what interested you in working there, and what your focus is at the firm?
Yeah, Electric Capital is an early stage VC firm that's only focused on crypto and Web3. We're based in San Francisco. One of the ways that we're quite different from most other VC firms is that all the partners are technical. Everyone codes. We have a large engineering team. And so if you look at our team makeup, we honestly look more like a startup than a VC firm. And that comes from this belief early on when we first got started that a crypto native VC firm is going to look very different. It's not about writing checks. It's not about kind of hanging out at networking events. It's really about inspecting what's happening on chain, looking at open source code, and then also being able to build products and build tools for the ecosystem at large to help them. And from an investing perspective, the help and the support that you provide means that you're going to be a more valuable investor. And hopefully that means that more founders are willing to work with you as well. So as an example of something that we've built is infrastructure to crawl almost the entirety of GitHub to understand the number of developers working in Bitcoin and working in Ethereum and working in Solana and Near and so on and so forth. And that's only possible because so much of crypto is open source. And so from that, we're able to publish a report every year that tells the industry like, hey, here's how many new developers joined in 2021. We had over 30,000 new developers touch open source crypto code base for the first time. Here's how many monthly active developers we have. And so we publish a lot of data around that for the crypto ecosystem at large.
Yeah, I saw that report. It's very, very detailed and pretty good. So thank you for putting that out there. Staying on the VC side a little bit, one of the things I've heard when you think about VC's involvement in Web3, there are a lot of people who think it's sort of antithetical to the ethos of Web3. And I'm curious what you think about that, because you guys are, purely a Web3 crypto sort of firm, but how do you see VCs playing a part in that, and how does that sort of differ from like Web2?
Yeah, it's a great question. Well, I think one kind of like the simplest, like most surface level question, which actually is quite counterintuitive to most people, is that as a Web3 native VC, you actually don't want a lot of ownership in the things that you invest in. And that's like that kind of flies against the traditional venture model where you're trying to take 15-20% of equity and that's how you get your returns. But in crypto, I mean, as you correctly pointed out, if someone owns 20% of the network, if one entity owns 20% of the network, that's a huge red flag. That's not something that you want to see. And so as a result, there's more collaboration in the space as well, because you want to participate, but you also want to bring in other people. Everyone is kind of incentivized to not actually be the limiting factor or be the central point of failure in a network. So that's certainly one way that, that even just looking at ownership percentages that VCs, crypto focused VCs are looking at, like that is very different. And then the support is also very different. The way that we support founders, a lot of early DeFi protocols will need liquidity. And so being able to do that, being able to run nodes and validators, being able to talk about like best security practices. I think a lot of these things are just not very unique to crypto itself. And then I think in addition to that, the structure of crypto-focused VC firms have to be very different from traditional VC firms as well, because you're often holding not only equity, but you're also holding tokens. And in addition to that, there's a lot of things that you can do with the tokens that's also value add for the founders themselves. So in the case of providing liquidity for early stage DeFi protocols, you may want to take those tokens and then put them into a pool for DeFi protocols that you support or founders that you're like helping, communities that you're helping to be able to bootstrap that ecosystem and get it off the ground.
Gotcha. You mentioned it's more like a collaborative partnership, and you're not sort of like a shark in the sense that what VCs are, you could say. I'm just curious then, what's the catch, right? What does that mean for your returns and for your limited partners?
Yeah. I mean, it's not it's not 100% hunky dory, right? Like obviously there is competition, but it is very, again, I think most Web3 VCs have this understanding that like you can try to take as much ownership as possible, but that actually is to the detriment of the project. So, as a result, I think it really is more anchored around the return profile of crypto. It's moving much, much faster and is eating a much, much bigger market than people have traditionally seen. And so the multiples in this market are bigger. And so you are able to take a smaller percentage, but because of the growth multiples that we're seeing, where DeFi was started around like 2019, 2020, and now all of a sudden has like $210 billion locked up in it. Like it's just that kind of growth multiple that makes it possible to take a smaller ownership, but still be able to deliver results to LPs.
Yeah, that makes sense. So then what do you say to people who just say like VCs own Web3? I think, Jack Dorsey had that tweet that blew up that was like, they're owning Web3, don't fool yourself kind of thing. Like any thoughts around that?
Yeah, I believe in efficient markets. And I think I do think there's definitely credence to what he's saying, and that there's this narrative that crypto is democratizing finance, but there is still a lot of VC participation. But I think, you really want to have like VC participation in a way that's helpful. And I think in Web3, you see a lot more competition for VCs than in other industries. Like specifically, like a lot of DAOs are participating as well, right? So I think, if crypto does end up being dominated by VCs, then it just doesn't get off the ground. It doesn't grow, and it doesn't kind of live up to its promise. So I think the market is efficient in that way, and that if indeed it is true that this entire thing just, works to the benefit of enriching very few people, then it never lives up to this new financial system that a lot of us believe that we're building. And I think the thing just dies on the vine.
The markets they always figure it out. So I'm sure it will happen in this case. Yeah. So then what kind of founders actually require VC funding? Because there's this perception that as a founder of a Web3 company, you can issue tokens, use that as fundraising efforts as a way to sort of foster the ecosystem in your own way. So what kind of founders actually rely on VC funding? I mean, I'm sure it makes them grow faster, but just curious, how do you think about token distribution to the public versus raising funding from VCs versus maybe a hybrid of both models?
A lot of founders don't. There are certainly things that are just launched oftentimes anonymously. So like Yearn is a good example where, Andre just kind of launched it, didn't take any VC money. And this certainly happens. So I don't think every single founder needs it. But for founders that do, it's generally for the reasons that you would think. So, VCs can provide capital while founders are in an exploratory period where they're still trying to figure it out. VCs can be helpful, or funding rather. It doesn't need to come from VCs, but funding can be helpful if you have, again, if you're early stage, this happens a lot. Like you're actually not sure sometimes if this is an equity business or a token business, and teams pivot, right? And they kind of need runway to be able to figure that out. And if it is an equity business, then you do need funding in that really traditional way. And I think for support in terms of connecting you to other people in the crypto space, or connecting you to people that may be helpful to the business, support in terms of thinking through product development and thinking through engineering best practices, thinking through hiring. A lot of these things are a lot of the traditional value adds that funding provides, just on top of the money as well.
Gotcha. How do you evaluate in your firm? How do you evaluate opportunities for investments? Is it similar to the traditional model, or is it quite different?
It's both. I think there are a lot of things that are still very similar because we're early stage. We're first check in for the team, and so a lot of that at the early stages. I think it's almost impossible for whatever someone is pitching in a deck, or in whatever is written down at that stage, to be perfectly executed because it's a lot of it is based on assumptions. It hasn't been tried out yet. And so you want to make sure that those assumptions are reasonable. You want to make sure that the team is really thoughtful and has the flexibility and capacity to pivot quickly if it turns out that they're not right about something, but has the tenacity to keep building. And you want to see that they're working in a market that is going to be really big. You want to see that they have the technical capabilities of actually being able to execute. And then, for crypto and for token networks specifically, you want to make sure that the token network design is very thoughtful, that there is an appropriate amount. They're thinking about making, if it is truly something community oriented, that they're thinking about how to bring this to the community, how to progressively decentralize, that there's nothing on the, no red flags in the sense that, hey, one person owns a bunch of stuff. Yeah. So I think, at the very early stages, you're really just looking for signals that this can be something that is very promising, and that the founders have the flexibility and the ability to adapt if it turns out that some core assumptions were incorrect, or if the market ends up shifting in a way that they were not expecting.
So then when you think about, the horizon for getting liquidity or the exit strategy, just given that everything's so new, how are you thinking about that when you think about when you expect to get the returns on your investment or distribute it back to your shareholders and LPs?
Yeah. Well, that's the nice thing I think about being like structured like a venture firm, is that the time horizon is very long. And so our LPs are, their capital is locked up for 10 years. So our time horizon is 10 years. Some funds are not like that, right? Some funds have LPs that can pull out every month, in which case it just incentive wise, like it just changes the way that you approach certain things. And so for us, we have the patience and we have ability to be able to support people for a very long time.
Okay. So when you zoom out and you look at the Web3 ecosystem as a whole, I know there's like NFTs, there's DeFi, there's other crypto stuff happening. What are your thoughts on just NFTs in general? I think right now they are sort of seen as just a way to express digital artwork. And some people also see it as just JPEG. What are your thoughts in general on that?
I think at its core, NFTs are really a way to express ownership. And so NFTs are, just like assets that you can own in real life. That can be your house and your car, that can be your phone, that can be your headphones, that can be like a sticker that you put on your laptop, right? Like items, big and small, valuable and not valuable, are things that you can own in the physical world. NFTs are a way that you can own things, assets in the digital world. And what that confers is the ability, so right now, if you buy a skin in a video game, you're really kind of doing that in the walled gardens of the video game itself. There are some kind of, frowned upon secondary markets where you can sell things, but on the whole, like, it is not expected that you can take this item out of the game, sell it wherever you want, to be able to transfer it to whomever you want, or to be able to like act upon it the way that you do act upon your physical assets. So like if you had your phone, you can leave it somewhere, you can give it to someone, you can sell it on any marketplace that you want, you can destroy it. That is what it means in the physical world to own something. But those qualities are often not able to be expressed in the digital world, and NFTs allow you to express ownership. And that's really valuable because I think because ownership is digital, it actually means that you can do a bunch of stuff that you weren't able to do in the physical world. So let's say that in the physical world, you created a pair of sneakers or something, and you sold it to someone, and this pair of sneakers then got resold again. In the physical world, like you really can't capture any of that secondary sales, but you can if the item is digital and you can program it, right? So in kind of the digital world for NFTs specifically, one of the key things that people have figured out that's important is that you can program in part of the royalties for secondary sales, which means that in perpetuity, the artist would be able to receive part of the sales, or in perpetuity, a lot of people can also program in nonprofit organizations, right? So let's say that you sell something that in perpetuity, a nonprofit organization can receive 5% or 10% of all secondary sales. And that happens, that like literally happens forever and is not able to be changed. So that's a really powerful aspect, as well as the ability to, you can split revenue any number of ways. You can split revenue infinitely. And a lot of creators have also played around with this concept where they'll take an NFT, they'll create it, but then for all of their early supporters or people in their community, they'll say, like, you know what, I'm going to create infinite splits of this. And if you support me, then you can receive a secondary, a piece of any kind of secondary sales on this item as well. So in that way, it makes the digital asset extremely flexible in a way that we really just cannot do this in the physical space. And then the additional thing on top of that is really the ability to plug into DeFi and to financialize this asset in different ways. So, let's say that you've financialized the top 40 songs, or you've created NFTs of those songs. You can take those songs and you can put in a pool, and now, and then you can fractionalize that pool, and now all of a sudden you can sell individual tokens that represent an index of the royalties that are going to the top 40 songs at a certain point in time. So these are all really kind of things that in the physical world would take a lot of effort to do, but in the digital world, you can just write programs to do this.
So when you think about the other sort of aspects of it, like DeFi, is there any sort of application, I guess, of the blockchain that you find the most interesting or you think has more potential?
Yeah, one thing I find really interesting is I think we're going through this huge behavior shift right now, and it's happening maybe so gradually that people aren't realizing it. But this is kind of the first time where anyone under the age of 25 has never experienced life without the internet. So we have whole generations of people who are now growing up in a world where the internet feels completely natural to them. I was looking at some data recently where worldwide the average for the number of hours spent online is 7 hours, which is the world, that's the average, and then you have countries like South Africa or the Philippines or Brazil that are spending 10 plus hours online. Again, that's the national average. And then if you split it by age, then again, worldwide, the youngest generation, anyone under 25, they're spending more than 8 hours online. So we're really living in a world where people spend more than half of their waking hours in a digital space. But the way that we still value things is still through the physical world. We value gold as an example, which I think in a while it will not make sense anymore. It kind of makes sense that digital things will become just the same way that we buy physical only items and we don't think about, why doesn't this exist in the digital space? We're going to end up buying more and more digital only items and not have to think about, does this give me anything in the physical space? Because we are going to be living our lives digitally. So I think that's a huge, huge shift. And NFTs as digital assets is just one kind of the tip of the iceberg. What I'm really excited about is when you think about, most of us living our lives now online, it's really going to be what we do online that really matters and defines who we are. And this already happens in the crypto space where it doesn't matter where you went to school. It doesn't matter where you went to college. It doesn't matter where you worked before. If you have a wallet that has done a bunch of impressive things in DeFi, that has been participating early, that has been active in governance, then that wallet speaks for itself. And so the things that you do on chain, those transactions, those items are essentially becoming digital lines on a resume. And I think that in itself is something I'm really excited about. So there are a lot of teams that are building credential systems. So Rabbit Hole is an example where they walk you through things that you can do and then give you proof of that, right? Give you credentialing for that. There are protocols like Nukes that we just invested in that is creating a protocol for people to create badges that people can claim retroactively. So let's say you're someone who minted a CryptoPunk originally. Now you can claim this as a badge. And, again, this kind of becomes a line on a resume. And I think what's really interesting here is if you do collect enough badges, you have enough reputation to show for it, then you start building all of that reputation. Really what it builds towards is identity. And this is identity that's not driven, it's not the government handed you a piece of, a driver's license or a passport. This is identity that is purely digital, that you have built based on your actions. It doesn't matter what gender you are, it doesn't matter what race you are, it doesn't matter where you live. It's purely based on the actions that you've performed. And I think that kind of digital identity system is going to be really interesting moving forward.
That's definitely interesting. I talked to, I think, Danny Zuckerman of Three Bucks Labs, and he was talking about, how identity could potentially just be like this hero use case and unlock a bunch of innovation, similar to some of the things you mentioned. So I'm curious to see it take shape. I'm sure it's all still pretty new and nascent, but interesting to see how that will play out.
Yeah, I think it's already taking shape. Like, you have people who are completely anonymous that are represented by an NFT that they own. And that person has a reputation, right? Like, so, Punk 6529 is Punk 6529. And like that entity, doesn't have to prove who they are to anyone. All they need to do is connect their wallet, show that they own this punk, and then that is all they need. Like, that's their digital ID.
Yeah, there's the privacy aspect, which is great. But then when you think about security, for example, like the KYC aspects of it, do you think that'll go away, or you think the regulations will have to sort of adapt to this sort of new form of anonymous identity? I just wonder how the government will take all this and make changes to it.
I think it depends. It's probably going to be use case by use case. If you have an anonymous identity online, like, I don't necessarily think the government is going to try to make you KYC, right? In some cases, that could be one person, that could be a group of people. Like, you can imagine DAOs controlling, DAOs themselves will be like an identity, an entity that's online, and that's going to be a big group of people. But I think regulation, that is inevitable. Like, that is something that's going to come. And I think it'll be really nice when it does, honestly, to get some clarity around it, because right now founders don't have a lot of clarity around how they should be building things, should they be structuring things so that they're compliant. And that leads to a lot of nervousness, and nervousness leads to a lot of moving outside the United States to build stuff. And so, I think, like, the US is potentially facing this issue where innovation is leaving its borders, not because things are getting regulated, but because they aren't, like, because there's no clear regulations. And so I think regulators are educating themselves very quickly on crypto. And so it is inevitable that it's going to come. And then I think when there is clarity, it will actually help the space.
Gotcha. Makes sense. Thank you. So when you were talking a lot about how we spend a lot of our time online, my mind kept going to the metaverse. What do you think? Any thoughts on the metaverse? Do you think it's going to be this place that sort of is a 3D model of sort of a physical world, and really just helps with that mental model of getting that digital physical hybrid going? Or how do you see the metaverse take shape here?
Yeah, I first got into NFTs because of the metaverse. Huge fan of sci-fi, and so metaverse is a pretty core sci-fi concept. And so, of course, when I heard about crypto voxels, I was like, oh man, now we really have a metaverse. Like, let me go in. Like, what is this going to be like? And I go in, it's 2018, and like there's some interesting buildings there. And then after a while, they created this ability for you to hang your NFT art on the walls. And so it like became almost a world where there's NFT art galleries and museums, that it's not the metaverse that we kind of think about, right? Where like people are living out their deepest like fantasies because they can't do things in the physical world. And that's just not, that is, at least today, not how these metaverses look. I think we probably I think this tech, in order for us to kind of pick like the way that a metaverse is expressed today is literally like, let's take our physical world but make it digital, right? Like, to your point, it's like, oh, it's a 3D world, let me walk around in it. I think our tech is just not good enough for this to be believable. It's certainly interesting, but I think that's a very narrow definition of a metaverse. It's just like when you think about the transition of when we first had the internet, right? And then people were like, oh man, the New York Times is going to own the internet. Like, we're going to put a newspaper, but the newspaper is going to be online. Like, that's kind of what I think of when we talk about modeling out a 3D metaverse, but in your browser or like in your VR headset, is that it takes a concept we're familiar with and it just translates it over. But often when there's new technology, that's not what ends up happening, right? Like, I think no one would have predicted in the early days of the internet that Twitter would be a huge source of information, that there would be TikTok, that there would be UGC content, that the biggest like information providers is not necessarily like newspapers. In fact, a lot of them died because of the internet, and it's not the Encyclopedia Britannica that has all the information. It's like Wikipedia, and it's just information in formats we didn't expect. And I think similarly, I would argue that we already, do live in a metaverse where when we talk to people on Discord, when we talk to people on Twitter, it's a giant MMO. Like we're essentially, we can be anyone, right? Interacting with anyone else. But it doesn't look exactly like the way that things look in the physical world.
Gotcha. So then you're saying the metaverse is not going to be this 3D version that I think I've sort of seen described. It's going to perhaps be more seamless in a way that you don't even know you're in the metaverse. It's just like sort of a part of your day-to-day existence.
Yeah, I mean, I think my proposal is that we actually kind of already do live in a metaverse. If you interact with people online that are outside of your normal physical social circles, so like a lot of gamers, are on Discord talking to people they wouldn't otherwise talk to. A lot of people are on Reddit interacting with people that they don't know. This person could be based anywhere. A lot of people are like debating with each other on Twitter or fighting with each other on Twitter. Like I think that's like metaverse 0.1, like version 0.1. And I think it'll just kind of progress from there.
No, that's a good way to think about it. I've never really seen it. I didn't realize I was already living in the metaverse. I thought I would eventually have to live there. So it's good to see that we're getting there. But no, it's not as scary as I thought it would be. So that's comforting. Yeah. All right then. So since you've been working in the space for a while now, and you at your company, at your firm, you see a bunch of portfolio companies. Are there any projects or spaces you're more excited about? I know you talked about identity initially, but is there anything else? Any companies you want to talk about that you think are doing some interesting work?
Yeah, I mean, there are definitely a ton. I think there's, right now NFT marketplaces are super interesting. It's almost like the first consumer facing application that has really worked in crypto, and it's brought in a lot of people who otherwise wouldn't have interacted with crypto. But like NFTs are, and like owning something, I think is a concept that just is a little bit more intuitive to people than like take this token, put it in a pool and earn like 200 APY, then take that LP token, put it in another pool and like do so. Like, I think that's like a little bit more convoluted, but people understand ownership and understand art and like understand membership. So I do think, NFT marketplaces are super interesting. We're investors in one called Magic Eden. And they're the biggest NFT marketplace on Solana. The team there is first of all fantastic, but they've also kind of really thought about things in a Web3 native way. They've created a DAO to like include their community. They have a lot of ways they're thinking about gaming assets and like how that's differently supported on a marketplace. So that's something certainly I think that is working and bringing people into crypto.
Gotcha. That makes sense. So switching now to the developer report. Thanks again for putting that out. That was a great source of information. And you mentioned Solana, and there's Ethereum. There's so many different chains. Do you just have a sense based on what you're seeing now of which one will win? Do you think they'll all continue to coexist, or will there be one eventual winner? How do you see those different chains playing out?
Yeah, that's such a good question. I don't know. I think that's the real answer, is that it's too early to tell. Right now, it's undeniable that Ethereum has most of the mind share and most of the network effects. Um, but there are also usability issues with Ethereum. Gas fees can be very high when there's high demand. And so, paying $200 sometimes for a transaction, or paying like $50 or even $20 for a transaction, it feels awful, right? Like no one,
It's nuts.
yeah, no one wants to do that. And, confirmation times are long. And I think a lot of these issues will go away with time, but the question is kind of like, in the meantime, are there other chains that can, have lower transaction fees? A lot of these chains like Near and Solana can have fewer than a cent in terms of like a fraction of a cent transaction fees. And so, and can be very fast. And so can some of these chains take share away from Ethereum, or, and it doesn't even need to be competitive, right? Can some of these chains be a gateway that a lot of people who haven't interacted with crypto before come into the space. I think it's a question of what kind of future will we live in? And will it be a future where there's one chain and or maybe there's like five big chains, main chains, and everyone kind of lives in their own chain country, like you're like an Ethereum citizen, or like you're a Near citizen or a Solana citizen, and like everything you do is on that chain. Or, is it kind of like people are just going to do whatever they want to do, and their wallet's going to interact with different chains depending on what is the best chain to do something, and they won't even know if it's on Avalanche or on Flow or on Ethereum, and it'll really just be kind of like the way that we interact with the internet today. We don't really know what infrastructure it's running on the back end. We just want to get something done and it's working. So I think it's probably too early to tell what kind of future we might live in. Or, there also could be a future where there's just hundreds of different chains and different types of applications live on each chain. I tend to think that there's going to be consolidation. And so I'm more of a believer at this point in time of a world where, perhaps there's like five big chains. So that's where I am today, but we'll see.
Yeah, I see that too. I think when you had that report, I sent it out to some friends who are devs who wanted to sort of explore Web3 development. And I think everyone was like, well, Ethereum's the winner, so I'm just going to stick with Ethereum. And there was that perception that Solana was owned by VCs. And they were like, I don't know if I want to do that. So I don't know if you're hearing anything like that or seeing anything like that, but it just feels like people are just going to keep going to Ethereum because they're just like, everyone's already on it. There's already a lot of code. So I don't know if you sense in that.
Yeah, there's crazy network effects there. I mean, it's also like if most of the users are there, then more or the developers are there. If more of the developers are there, the developer tooling is better there. Like there's real network effects that are hard to break. And yeah, I think the question is like, because of some of these usability challenges, I think a lot of developers are exploring other chains. A lot of brands or a lot of apps that want to deliver something kind of usable to someone who hasn't interacted with crypto before, that has never worked with MetaMask before. They want some sort of experience where you don't need to know how to use MetaMask, or like you don't need to pay at minimum maybe $20 to do a transaction. And so for a lot of these use cases, and also for games and things like that, where there could be like hundreds or thousands of transactions, because of like each transaction is an action that someone does in a game, and it doesn't make sense to do that on Ethereum. A lot of those things I see being built outside of Ethereum. And it's interesting too, I think a lot of these layer ones, again, because they don't have the same constraints, might end up building applications that work and look different. So for example, if transactions are faster, then you don't need to be as over collateralized for lending. You can actually have a little bit more efficiency in the lending market. And so because you can liquidate people faster in the case where prices are falling and they're starting to get under collateralized. And so, then like lending protocols with different infrastructure are starting to be built on other chains. So I think some of those differences may just amplify over time as well.
Gotcha. Makes sense. Thanks for sharing. So back to Electric Capital now. I'd be remiss if I didn't ask you, you said you're an early stage fund. Are there particular companies or areas you want to see right now from founders? And then what's the typical check size you write to these companies?
Yeah, so I mean, I'm personally super excited about things happening in the NFT space and things happening in the DAO space. So, I've already talked about identity as something. I think, it's very clear to me that in 3 years, a lot of creators are going to be leveraging NFTs as additional revenue sources and as ways to engage with their community a lot more closely. I think in the meantime, there's a lot of negative perception around, NFTs as being money grabs. And so I think there's, in my head, it's like, okay, well, this is a thing that's going to exist. In the meantime, it's very challenging for this thing to exist. So I think I'm really curious about teams that are building ways to go to market to service creators and help them use NFTs, but in a way that's very, very reasonable and like kind of understands that the reality is that a lot of creators don't want to engage with NFTs. So that's something I'm pretty curious about. And, in the DAO space, we're probably just a little too early there because I think DAOs are still getting formed, and it's still a question of like what they need and what are best practices. But I think in the DAO space, it's also it's very clear that this is, to me, just like the concept of a company had to be invented. Like that wasn't something that existed before, and then it did, and it created a lot of efficiencies where people could have limited liability, where you didn't need to go to the king to apply for a charter to do something, and you can kind of raise money and take outside investment. Like that actually led to a lot of innovation, just being able to do those things. And similarly with a DAO, all of a sudden you can have the equivalent of a bank account in a few minutes. You can have people from all over the world contributing funds. Something like Constitution DAO, right, can raise millions of dollars over a weekend to do something like super crazy, like buy the Constitution. Like this is like a new way that organizations can function and allocate capital. And so that's definitely a space I'm very interested in as well.
Yeah. And then what's the check size?
The
range of it?
Yeah, usually like anywhere from like maybe 3 to 5 million, but we're very flexible. We can go lower than that. And then our biggest check size is probably a $20-25 million check.
Wow. What's next to Electric Capital?
Well, we're hiring. So that's actually one thing that's super top of mind. So I would say if you are technical, especially if you are a woman, please get in touch with us. We're hiring across the board. We're hiring back-end engineers, front-end engineers, data scientists, data engineers, and yeah, come build with us. We're building a lot of open source things and public goods that can be used by the crypto ecosystem at large. So if you just like building and if you want to build stuff in the crypto world and want to get paid for it, then come talk to me. I can answer questions even if you're not sure about it.
Awesome. Well, you heard her, people. Reach out and definitely apply if you're interested. Yeah, Maria, thank you so much. Is there anything else you want to share? Any resources for anybody who's looking to get into the space? Obviously, I'm a big fan of getting more women and people of color into the space, but it doesn't seem like we're getting enough traction there. So just any resources. I'm just saying, like everyone, I say this in every episode, but it's like, everyone's like, yeah, crypto is going to like make the world a better place and create equity. I was like, it's the same. So what's the point, right? And so I'm a little bit jaded in that sense. So if you got any words for people like me and others, I'd love to hear it.
Yeah, well, I will make one plug for Komorebi, which is a DAO that invests in women and non-binary gender founders, and in a world rife with problems, and I would argue like crypto is even more rife with problems than like the typical tech industry. What I do find really interesting is like there are, the ability for people to get together, aggregate capital quickly, and then allocate that capital means that some of these quote unquote niche initiatives or things where, maybe not a critical mass of people care about it, but enough people care about it. It actually is, you are actually able to get capital and momentum around that, thanks to, first of all, information thanks to the internet, but then money and financial infrastructure thanks to crypto. And so DAOs like Komorebi are great for anyone who's founding a company, who's a female founder who wants to get some funding. And then, also I'll always feel free to reach out to me. You can DM me at Maria Shen on Twitter. My DMs are open if you ever want to chat about anything.
Yeah, and that's true. That's how I got her on the show. I DM'd her and she responded. So thank you, Maria. I appreciate it. Yeah, this is great. Thank you so much for your time. And I guess Twitter is the best way for people to reach out to you and keep in touch with you, right?
Yes, absolutely.
Awesome. Thank you very much, Maria. This is great.
Thank you. It was lovely chatting. Thanks for all the great questions.
Thank you so much for listening. If you enjoyed this episode, please subscribe wherever you listen to podcasts. I'm your host, Laide. Until next time.